G'day folks, welcome back to another update for natural gas and its ETFs. Now the price is retraced as per the bearish divergence we drew up last time. So I'll go into the fundamentals first. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, February 21st, for the ETFs, ProShares Ultra Bloomberg Natural Gas BOIL currently priced at 88.73, reflecting a decrease of 7.09% from the previous close. ProShares Ultra Short Bloomberg KOLD trading at 21.34, an increase of 7.83 from the previous close. Our United States Natural Gas Fund UNG priced at 21.73, down 3.96 from the previous close. These fluctuations are influenced by several factors: cold weather, recent severe winter storms have heightened heating demand, leading to increased natural gas consumption. Geopolitical tensions, ongoing conflicts such as the Russia-Ukraine situation have raised concerns about supply disruptions impacting natural gas prices. And AI data center expansion. The rapid growth of AI technologies has led to a surge in data center construction, significantly boosting electricity demand. This expansion is projected to increase data center power consumption by 160% by 2030. As always, we start with the long-term trends. So we've got the monthly, the weekly, and the daily. So it depends which time frame you're trading. You'd be trading in the direction of the higher time frame. So for example, if you're trading on the daily, we look at the weekly trend and trade in that direction and so forth. Now on the monthly, the CCI is broken above the moving average band, giving us a bullish signal, likewise the price, and there's no sign of divergence on the monthly, so that's a good sign. Bullish move on the monthly. On the weekly as well, another bullish move. Again, no sign of a negative divergence. There was a bit of a pushback here that broke above the moving average band on both the price and the CCI, and it's still rising. However, there's no divergence on the weekly, and there's no sign yet of a pullback on the weekly. On the daily, if I just expand this one, you can see there it's also broken above both the CCI and the moving average band. And if I was to draw in all the support lines, you can see there it's still potentially going to hug this ascending diagonal trend line. It bounced off this key resistance. We drew this key resistance today actually after that pullback from yesterday at 43.64. And that's our new key resistance. Our minor resistance here is at 39.46. And you can see there the price is pulling back towards this minor. Now it's a support level. This minor support at 39.46. But again, it may sort of come back towards this horizontal and also this diagonal support. So we'll just keep an eye on that and let you know how it goes. Although the CCI is still bullish, well above the moving average band. Now, if we go to the intraday charts, we always look at the micro charts. Even if you're trading on the daily in the direction of the weekly, we still look at the micro charts to give us an idea of what potentially may happen. So it's not a huge pullback on the daily, but you'll notice here on the 1 hour chart, we did draw this on our previous video. We did draw this trend line up to that point, and since then it's actually expanded slightly higher, in which case we're going to realign this Fibonacci retracement. But you can see there it's already pulled back and broken through that minimum Fibonacci level. So if we were to draw a new Fibonacci retraced back to that low, you can see there it's actually moved slightly higher than what it was before. So that's our new target area that's already been hit. Broke just below that 38% level, didn't quite get as far as the 50%, and it's bounced back down, back up towards that 31% Fibonacci retrace. So, and you'll notice there as well the CCI is quite bullish movement, and so is the price. So theoretically you can take a long trade there if based on the daily trend being long, but just be cautious, we might see further decline. So you'd have to have pretty tight stops here if the price fell below that range of the moving averages. You may want to put some stops in there, but at the moment bullish move on the 1 hour and all time frames. So for BOIL on the monthly, it's still bearish below its moving average band on the price chart. No CCI for it on the monthly. On the weekly, however, we've got this bullish divergence. CCI is trending higher versus lower lows on the price, and it actually eventually started to bounce. So far that's still in a bullish move at the moment on the weekly, with those breaks above the previous highs in those recent highs. On the daily, again, we've got this new resistance line I've drawn as of yesterday, as of this morning, at 96.80, and that was a result of this pullback since our previous close. We raised that resistance slightly and we're waiting for that confirmation, and now you can see there on the CCI it's also pulling back towards that moving average range. So be cautious about going long. I'd like to see this break higher than that resistance to be a lot more positive. That's the daily. If we go to the intraday chart, the 1 hour chart. Again, we only take long trades in accordance with the daily trend, but you can see there more closely, it's bounced off that resistance we've drawn, the bearish divergence. You can see that high is slightly higher than that high, which is not strictly a divergence, but it actually pulled back in line as it has with the commodity natural gas price. Now again, just be careful, this one's actually trending bearish, so don't go long yet. I'd like to see this break higher than that moving average on the CCI. The price is already above the moving average, so I'd like to see that break higher to take any long trades on this one. But at the moment, it's on the 1 hour chart, it's bearish, so just be cautious to hold off any trades on this one. For KOLD, this one has broken below the moving average band of the monthly chart, giving us a bearish signal. There's no CCI for the monthly on this one also. On the weekly, this one actually had a bit of a bounce due to this bullish divergence. There was a bearish divergence, bearish move here on the price versus bullish move on the CCI. At that point, that was back in 2022. And since then, the price has been rising in accordance with this bullish move on the CCI. Now, more recently, it's broken down below both the moving averages of the CCI and the price, and that's still declining. There's no sign yet on the weekly of any pullback. On the daily, if I expand that one, now I did have actually removed the previous support level, which was up at that point there. I'm going to add a new major support at that point there, and that's our new support, so just be cautious. So again, this may bounce from there. We've got a bullish divergence here. You can see there that from those points, higher lows on the CCI versus lower lows on the price. That's a bullish divergence. And in terms of retrace, the minimum, I like to take it back to the recent high. You can take it back to that one, or even that one. Won't be much difference in terms of the target area. But if I was to draw a minimum target, I'd be looking at, oops, let me just redraw that. A 23.38% level. That's a minimum retrace level. So this, of course, could keep dropping, and as long as that keeps dropping and the CCI keeps rising, we're going to keep that as a bullish divergence. Now, I don't trade these, so just be cautious about trading this. You could if you really wanted to risk it, but that'll be your initial target on the daily if you're going to place a long trade here. Obviously, your stop would be below that support level, a few points below that. Now, to go to the intraday chart, again, predominantly we take short trades. Remember the golden rule: we take trades in the direction of the higher time frame. If you're trading on the hourly, this one is not strictly. Actually, it is. You can see there. If I let me just blow up this CCI, you can see there that is a higher low on the CCI, and if we compare that with the same period on the price chart, lower lows on the price. So that's a bullish divergence. Now let's measure this on the hourly, see what it's done. So if we take it back to, let's take it back to, you can see there it's already hit the 23% at that level. So it depends where you take it back. Let's take it back to a significant, let's go back to that level. That's our, if we take it back to that significant high, Fibonacci retrace, we're looking at a target area between that 23 and at 38% level. So let's assuming that. Now this could actually break a bit lower. Again, like I said, if this Fibonacci was drawn to one of these recent highs, you can see there it's already broken that. With the exception of that was the last high it broke. It just touched that 23% there. But I'm going to be a bit daring today, and I'm going to place the high, like I said, up until that high there, that 23.38% level. So I'll see what it does, but at the moment it's a slight bullish move on KOLD for this one. And for UNG on the monthly, we've got a slight bullish move on the price chart, bullish move on the CCI, very narrow range on the CCI moving averages, but that's a slight bullish move, possibly neutral on the monthly. On the weekly, we did have this bullish divergence, and that's been in a long-term play since the start of 2023 versus lower lows on the price, and eventually the CCI kept rising, and eventually the price also made new more recent highs there. On the daily, I've drawn this new support resistance level, I should say, at 22.72. That was back here previously along that previous top. So that's now pulling back, and that's our new key resistance. So keep an eye on that. You'll notice the CCI is pulling back as well, in line with that drop of the price. Now, if we go to the intraday chart, on the 1 hour. Again, you can see it more clearly. The CCI is broken down into a bearish move, so avoid going long or short until we see this move in the direction of the daily at least. And for that to happen, we need to probably see the price break above this resistance to be bullish. Now, in terms of, you can see there, if I drew a measurement tool along those tops, a double top on the CCI versus from that point, higher highs on the price. That's a bearish divergence, and that would have been wise to take note of that, and that actually fell down and broke into our minimum range. And again, let's see how far the minimum range would have been. So again, if it depends on where you take it back to that level, it's already touched that 23%. And if we took it back to that level, that's also technically just touched it along those bottoms of those candles. So again, always pay attention to these divergences. But at the moment, don't go long or short on UNG until we see this break higher, or alternatively, we might see it fall further to the downside towards this diagonal trend line.
To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.